The emerging markets of the world have never been so important to the global economy. As Europe and the US struggle against a return to recession, markets in Asia Pacific, Latin America and Africa continue to grow apace. With massive transport infrastructure investments planned or underway, markets which were formerly disconnected from the world's trading economy are becoming increasingly integrated into global supply chains. Their vast consumer markets and their relatively low-cost labour resources have not gone unnoticed by global manufacturers who face perhaps a decade of low growth in their home markets. This has had already consequences for transportation and logistics providers who are investing heavily in assets and operations to support their clients' increasingly extended and remote supply chains. However, not all emerging markets offer the same levels of opportunity. The Agility Emerging Markets Logistics Index was established to answer these three key questions. Which are the most attractive markets for investment? Which are the largest and fastest emerging trade lanes? How do global supply chain executives view the future of emerging markets? The first part of the report, which together with Agility we are launching today, is the Emerging Markets Logistics Index itself, a quantitative analysis of the major emerging markets against a number of key metrics. The index is designed to objectively identify those markets which offer investors the greatest potential, and conversely, those which face the greatest challenges. It looks at each country in terms of market size and growth attractiveness, market compatibility, that is, the fit between a market and the services which developed transportation and logistics operators provide, and connectedness, the strength of transportation links and services connecting a market to the rest of the world. In this year's index, China remains the most attractive market for investment. The sheer scale of the economy and its ongoing growth makes it a market which cannot be ignored. The vast sums of money which have been invested and continue to be invested in ports and airports have ensured that it is highly integrated into the regions and world supply chains. The one metric on which it does not score so well is market compatibility. In terms of distribution of wealth, urbanization, development of service sector and bureaucracy, key issues for transportation and logistics companies, it has plenty of room for improvement. India, only second to China in the rankings, improved its overall score thanks to the huge scale of opportunities which exist and the strength of its growth prospects. However, transport infrastructure investment has lagged other economies, resulting in weaker connections to the developed world, making trade challenging and inefficient. Regulations, bureaucracy, and market accessibility have also held back the market. Brazil is the third of the top three most attractive markets, although it too has infrastructure issues. Given the size of the economy, it is considerably underperforming, although the government has taken steps towards improving its links. With major events such as the World Cup and Olympics on the horizon, much more attention and investment will be needed. The second part of the report looks at emerging market trade lanes. By quantifying the most important trade lanes and then analysing growth rates over the past 7 years, it is possible to identify which offer the most potential for the associated transportation and logistics industry. Unsurprisingly, the biggest sea freight export trade lanes, from developing markets to developed markets, connect China to the EU and the US. These trade lanes have seen significantly above average growth in the past few years, underlining their importance to the global economy. However, of most significance is the growth of imports from the developed world to China. The expansion of the Chinese economy has sucked in goods from around the world, resulting in imports growing at double the rate of exports. It is inevitable that China's growth into a major consumer market will have a significant effect on global trade. GDP per head in China is just $2,000, a tenth of that in the US, but there are expectations that this will increase significantly and even overtake the US at some point in the next 20-30 years. The index provides evidence that China is rebalancing its trade with the rest of the world, and this should be of considerable note to companies involved in the movement of goods to and from China. For instance, this will have a significant impact on shipping economics as head-haul and backhaul volumes move towards equalization. Looking at the fastest growing sea freight trade lanes, Oman tops the rankings. Volumes of non-energy exports to the EU have increased tenfold as the country has sought to reduce its dependence on shipments of oil. Other Middle East economies such as Qatar, Saudi Arabia, UAE and Kuwait have also pursued the strategy of diversification and are amongst the fastest growing non-oil exporters. In the opposite direction, the fastest growing trade lane for sea freight imports was EU to Paraguay, followed by US to Vietnam. In terms of volume of air cargo exports from emerging markets to the developed world, China-EU is the most important lane, followed by China to the US. Other important, albeit much smaller, trade lanes include India-EU, Kenya-EU and Colombia-US. The shipment of perishable goods, particularly flowers, is highly important to the latter two markets. Looking at the most significant air cargo trade lanes moving goods to emerging markets, unsurprisingly EU-China and US-China top the list. EU to India, EU-UAE and US-Brazil make up the top 5. The movement of goods to the UAE will involve a substantial amount of transshipment volumes, as Dubai in particular acts as a major hub for the region. Any confrontation in the Gulf involving Iran and its neighbours will inevitably have an impact on these volumes. In terms of fastest growing air cargo trade lanes, Ethiopia is an important origin for both the EU and US, with volumes growing at more than 40% a year over the last 7 years to both destinations. Nigeria has also seen air exports to the EU soar. In terms of import traffic, EU to Paraguay has seen the fastest growth, followed by US Qatar and US Ukraine, which saw compound annual growth rates increase in the mid-20 to 30% range over the period. The third part of the report consists of a major survey in which 550 senior supply chain and logistics executives were asked a number of questions about their perceptions of opportunities and challenges in emerging markets. The 4 BRIC economies, Brazil, Russia, India and China, were most frequently chosen as the major logistic markets of the future. Turkey, Vietnam and the UAE also featured prominently. This was due to their economic growth prospects, although cheap labour forces and foreign investment were also factors in their popularity. The survey also found that the most important challenges facing emerging markets were poor transport infrastructure, corruption and government policies, all of which have discouraged investment. These issues are directly under the control of the authorities and regulators and could be addressed if the political will exists. Respondents were asked more specifically about one of these key issues: the importance of corruption when doing business in emerging markets. 98% said it was either important or very important, an indication of the problems which companies face. Iran was rated by the survey as the market having the least potential. Given the tensions which exist presently in the Middle East, as well as with the EU and US, this is hardly surprising. Further sanctions will make trade with Iran even more difficult, especially if it were to carry out its threat to disrupt trade through the Straits of Hormuz. Ethiopia was also chosen as being highly unattractive, most likely due to the security situation which is developing in the Horn of Africa, especially with its close neighbour Somalia. However, overall, the survey was upbeat on the prospects for the emerging world. 3/4 of respondents said that they thought the prospects were either very good or good for emerging markets, underlining the importance of these regions for future investment by the supply chain and logistics industry.